What's up, guys? Bang, bang. KPMG came in super hot to start the week. KPMG released a brand new white paper where two authors said that Bitcoin is an ESG-friendly asset. They didn't just make the claim, though. What did they do? They went ahead and they took that ESG framework, environment, social, and governance, and they overlaid Bitcoin, and they showed exactly why Bitcoin fits into that framework and checks all the boxes. They use cold, hard facts to prove the point. When you go ahead and you look at Bitcoin, many people say, oh, it uses too much energy. But as we know, about 60% of all energy used for Bitcoin comes from renewable energy. The reason why that's important is the average percentage in the American economy is closer to 18% for an industry. And so Bitcoin is 3 times more likely to use renewable energy than any other industry. Maybe we should tell the other industries to get on Bitcoin's level. When it comes to all of the social potential benefits, what we see are things like Ukraine fundraising or the ability to do remittances, also the ability to save and protect yourself from inflation. The KPMG team laid it out perfectly this week in that white paper. And then lastly, when it comes to governance, oh boy, if you're decentralized, that means that not one person or organization controls the network, and therefore, check mark, you have a better governance system because it's more democratic. It allows for more participation than other systems that exist. And so KPMG putting their stamp of approval on Bitcoin from an ESG lens is a major deal. Why? There have been people in the Bitcoin community that have been talking about Bitcoin being an ESG asset for a long time, but the messenger matters. And KPMG's got way more gravitational pull when they say it than me or anyone else on the internet. That also then leads to another institution, Microstrategy. They went ahead and they bought just over $14 million of Bitcoin. That brings their Bitcoin holdings up to 152,800 Bitcoin. Microstrategy also went ahead and issued $750 million of potential shares of their business to sell into the market. Those proceeds very likely will go to be converted into Bitcoin as they sell shares, raise cash, buy Bitcoin. It's a whole game. Michael Saylor's been playing it for a while and looks to continue to want to double, triple, and quadruple down on this strategy. Now, that's not the only thing that happened. Of course, Will Clemente, he pointed out that we now have seen about a 30% reduction in the number of Bitcoin out on exchanges since 2020. This is a big deal because it signifies that many of those people who took their Bitcoin off of exchanges are likely to hold them for the long term. They can't just go on and be emotional and click a button and sell the Bitcoin tomorrow. Of course, they've got to then move it. There's more friction. That signals that there's likely to be longer term holders taking over the market. On top of that, we now see that the Bitcoin network has settled 870 million transactions. We're not talking dollar figures here. Individual transactions on the Bitcoin network all time, 870 million. That means we're closing in on the one big number, 1 billion. When Bitcoin hits 1 billion transactions on the network, it's going to be hard to continue to ignore it. 870 is pretty damn close. And so if you're continuing to ignore Bitcoin, I don't know how you even found this page, this video. I don't know what you're doing, but 870 million transactions is a big number. And then Dylan LeClaire, he did a bunch of Einstein math and he figured out that the 10-day realized volatility of Bitcoin, that happens to be lower than stocks or other assets. Why is that important? It's because Bitcoin ultimately is a positive addition to a portfolio. If you go back and you look and back test all the data, putting a little tiny bit of Bitcoin, whether that's 0.5%, 1%, 3%, whatever that number is for you, into a portfolio tends to lead to an increase in returns. And because it has a long history of being non-correlated over long periods of time, it tends to provide a bunch of positive attributes to a portfolio that you can't get with other assets. Now, of course, last but not least is that there has been a ton of talk around regulation. And one of the big stories that came out this past week is that Coinbase was asked by regulators to delist everything but Bitcoin. Whether that ended up happening or not, whether regulators actually believe everything else is a security or not, and whether a court decides that the other assets are securities or not, it doesn't matter. Bitcoin continues to be the asset that everyone agrees is through the regulatory threshold. No one in a serious manner, no one in a position of power seems to be saying Bitcoin is a security, and so it has regulatory clarity, which means green light for institutions, and we're likely to see more and more of them continue to come in. Now, what hasn't happened, and I'm waiting for the update in order to be able to share with all of you beautiful people, is that Bitcoin's ETF, the Bitcoin ETF, spot ETF applications, they have not been approved yet, and neither has GBTC been able to convert into that spot Bitcoin ETF. At some point, I don't know when, I don't know why, but at some point I will be able to deliver that awesome news to all of you. Until then, you have to keep coming back here to watch these videos, my ugly face, my beautiful voice, and all this great information. Hope that you enjoy this video. Before I leave you, I got a big announcement. This video was brought to you by Start Engine. The biggest fortunes aren't made on Wall Street. They used to be made there, but now they're being made in private markets. Consider Mike Walsh. He put $5,000 into Uber. He's just a regular dude, turned into over $24 million. Such opportunities were once held behind closed doors, reserved for those who had connections or vast fortunes, but not anymore. Start Engine is now going to tear down that glass ceiling and make startup investments possible for you and me. The company is led by Howard Marks, the co-founder of gaming giant Activision, and they got 1.7 million users that have put in over $1.2 billion of transactions on the platform. But the best part is the platform's not even backed by traditional venture capitalists. It's backed basically by the community. They've raised over $75 million in crowdsourced funding to date. Go check them out at startengine.com. You can open up a Start Engine account today, and you can explore live investing opportunities with starting investing amounts as little as $100. Startengine.com. Go check them out today.